What if I told you that the IRS has a perfectly legal way for W-2 employees to save up to $8,000 a year in taxes? And almost nobody in your office knows it exists. That's not a gimmick. That's not some offshore scheme. That is a real, documented loophole sitting inside the United States tax code right now. And the people who are using it are quietly keeping thousands of dollars that everyone else is handing over to the government every single April. Welcome to MoneyMindDaily, where we pull back the curtain on the financial strategies that separate people who actually build wealth from people who just work hard and wonder where all their money went. Stay with me, because by the end of this video you are going to know exactly what this loophole is, how to qualify for it, and the 3 mistakes that kill most W-2 employees' chances of ever using it. Let's start with a number that should make you uncomfortable. According to the IRS's own data, American workers paid over $2 trillion in individual income taxes in the most recent fiscal year. $2 trillion. And the vast majority of that came from W-2 employees. People with regular jobs, regular paychecks, regular tax withholdings. Not from business owners, not from real estate investors, not from hedge fund managers. From people like you and me who get a salary deposited every 2 weeks and just assume that whatever gets taken out before the money hits our account is simply the cost of having a job. But here is what the wealthy figured out a long time ago, and what most middle-income earners have never been told. The tax code in the United States was not written to treat everyone equally. It was written with specific advantages built in for people who take certain actions with their money. And many of those advantages are completely available to W-2 employees who know where to look. The IRS is not going to call you and explain this. Your employer is not going to walk you through it at orientation. And most accountants, frankly, are focused on filing your return accurately, not on aggressively finding every legal dollar you are entitled to keep. So today we are going to walk through the specific loophole that is hiding in plain sight inside the tax code, why it works, who qualifies, and how an ordinary salaried employee in a city like New York or Los Angeles can realistically save somewhere between $3,000 and $8,000 this tax year alone. And I am going to show you all of it through the story of a real person. Someone you are going to recognize immediately because their situation probably looks a lot like yours. Her name is Emily. She is 34 years old. She lives in Chicago, Illinois. She works as a marketing manager at a mid-sized tech company on the north side of the city. She makes $78,000 a year. Her employer takes out federal income tax, state income tax, Social Security, Medicare, and her health insurance premiums. Thank you so much for watching. If this video helped you, please hit like, subscribe, and share it with one person who needs to hear it. See you in the next one.